Hello and welcome everyone to another weekly market commentary from StashAway. With us, of course, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hi, Philip. Good to see you again.
Good to see you as well. It's been a long couple of days now. The US election, we've been, long time coming. We've been talking about it quite a bit throughout the year. We finally came to a conclusion, but not really. But Freddie, do you want to give a quick update? Obviously, markets have been, on a roller coaster last week, and now, though, for the last 2.5 days, right? It's been very, very positive. Even though, for many people's surprise, we still don't have a president-elect, right?
Okay. If we step back a bit, yes, Biden is leading with the counted votes, but there's still a lot of stuff coming in. But the conclusion is that Biden, all he needs is to win Nevada, and he would have the minimum majority of votes to be a president. But I don't think that who is the president is the important question for markets, but more about the party dynamics, party majorities in each chamber of the US Congress. And the good news here was that the Republicans retained their firm majority in the Senate, which makes it really tough for Democrats to push through stuff like antitrust measures on big tech firms. So that reduces the breakup risk on companies like Facebook and even Google. So tech stocks outperform again, as we've seen yesterday. That's for a good reason. However, the Democrats also retain the House, although they lost some seats, but they still retain a majority in the House. So the likelihood of the hung parliament, so to say, is very likely again. As you know, whoever is the president don't pass bills. They can veto, but they don't really pass bills. So which leaves us to Biden's foreign policy on China. It's still hostile towards China, but again, one version that's more towards using the WTO, engaging international allies to pressure China than to do unilateral actions such as a trade war. So overall, again, another relative positive for markets. So I think the fogs are clearing and the markets are really stabilizing and looking quite strong.
Yeah, no, thanks, Freddie, for that update. I think, you made a good point, because a lot of people are only looking at the president-elect, right? Because that's the big prize. But yeah, there were a lot of fear that the Democrats would actually sweep completely, House as well as the Senate away, and then there would be a lot of power in their hands, right?
Yes.
So good summary of that, Freddie. The next thing that was obviously in big news over the weekend and early part of the week is the highly looked out for and Financial IPO, right? Oversubscribed, huge build up, listing in Hong Kong and China and Shanghai, right? Was pulled last minute. Can you update maybe the listeners a little bit what happened, and then also what implications does it have for StashAway, since we do have KWEB, which is a Chinese technology ETF that does have Alibaba, the parent company of Ant Financial, as one of the holdings.
Well, it was a very last minute shocker for Ant Financial for sure, and for investors who were gearing up to join the IPO. And allegedly it was due to Jack Ma's comments, which I would rather not dive into, but more about taking a more objective approach. If you look at what the regulators, the central banks have said in China, is that Ant Financial is fast becoming a systemically large institutions in China. And however, its deposit requirement, capital requirements, and all those regulatory parameters remain much like a fintech company rather than a big banking institution sort of requirements. So the set reason was to review capital requirements, risk parameters, and perhaps to implement more stringent measure for their capital reserves before the IPO can go on. So that was the official reason, and actually to me it does makes a lot of sense because you're going public and you are huge. So you're taking deposits now. So
big IPO, exactly right, and a lot of retail investors wanted their fair share of it, right? So only only right that there will be a little bit more due diligence being done.
And having said that, yes, the KWEB, which is a Crane Shares China Innovations ETF that we have invested in, has close to 10% of its fund size holdings in Alibaba. And it does, I think that Alibaba itself contributed probably to a negative 0.9 percentage point in return these few days. But the fund is so diversified that it's actually ended up with this week so far a lot more positive. I haven't calculated, but off the back of the envelope, is up about 4.7 points out of a share price of 70 in the 75s. So it's up 6 percentage point roughly. So it didn't matter at all. So there's a power of diversification. I just want to remind audience that power remains in place.
No, absolutely. And I think this is a good reminder for everyone, right? Like that, not picking individual shares, but own the sector, right? Own that piece of the market and be diversified. That's right, Freddy. Let's get to some questions. We actually got quite a few from last week from listeners. So, and for everyone that's new listening today, feel free to always ask questions in the comments below so that Freddy and me or the team can pick those up for Freddy and myself to answer them. But let's get into them really quickly. The first one is from Ritz. He's saying, what's the best way to lock in profits that we've gained without completely liquidating our portfolios on StashAway?
Well, that's akin to not withdrawing it, but more like adjusting your risk level. But I would, the power of technologies that allows you to do flexibly what you want to do here, which is market timing in nature, which is something that we do not really recommend. But we rather you review your risk level and as to why you are so uncomfortable with the current risk level in the portfolios you have, and review that reason and make a case for reducing risk. And that would be akin to sort of what you're trying to achieve here, logging in some gains with the higher risk points that has more exposure to riskier assets that's gained, and moving it to a more balanced portfolio where you become a bit more protective. And so there will be changes in the asset classes in the portfolio. So they will sort of make you lock in some of the gains in the aggressive sectors. But again, I would urge the reason to be more about your risk appetite than your market timing.
Yeah. And I think the next one is almost like a follow-up question, right? But it's from Corey. And he's saying, are you able to withdraw the profit out?
Well, you can withdraw anything you want. There's no lockups like in traditional hedge funds. There's no withdrawal penalties or fees. You click the button and just banking delays. A day or two, you get it. However, we would rather recommend you take a long view on it. What's the reason behind the withdrawal? If it's a cash need that's outside your investment plan, you have a sudden emergency, a sudden changes in the personal life that you want to withdraw, that's understandable. But however, if it's due to a market opinion or market timing reason, then try to actually review your risk appetite as to why you're uncomfortable and make the right risk adjustment rather than withdrawing completely. We have mentioned in the past before, the cost of market timing when you get it wrong is actually extremely high. JP Morgan has done a study over a 25-year period in the past that if you miss the top 10, just the top 10 days in that 25-year period for the S&P, your return actually would drop from 9.8 percentage point to 6.32. If you miss another top 10 days after that, it goes down to three in the trees. So just missing those little bit of a big days would lose the majority of return. So it shows the danger of market timing. So I just want to make sure the reason for withdrawing is actually more related to personal circumstances.
Yeah. And then the next question, Freddy, came from Melvin. He's saying, since you guys have gold in the portfolio, are you considering adding cryptocurrencies such as Bitcoin to the portfolio as well? Has been doing pretty well since the March crash this year.
Well, we are always on the lookout for new differentiated asset classes to add into the flagship portfolios. However, there are also regulatory standards and constraints. And in the case of Bitcoin or specific currencies, cryptocurrencies, it makes it, they are quite, today they're tough to qualify as exempt investment product. Exempt investment product are basically simple product for retail investors to invest in. If they are not EIP, meaning they are not simple, there will be additional hurdles and requirement and due diligence that needs to be done and needs to be approved by regulators before we can move on. So it's actually more from this angle that is harder for us to actually just include those cryptocurrencies in the portfolio. So it's less likely today. But as things improve and standards improve in the segment, and we are monitoring all the time, they will make it one day, but not today. So that will be my summary answer. But we are looking into broadening it, not just a single token, but how about even looking at blockchain technology rather than the cryptocurrencies as a whole, as another segment to consider, right? So these are things that we are constantly on the lookout for and reviewing for. Today it's not happening, but we are monitoring for improvement in regulatory parameters for reasons to include them.
Yeah. And then the last question, Freddy, for today, I know we had a lot of them, but JJ To, he's asking, so StashAway has an income portfolio that's based on the Singapore market, right? Our Singapore-based income portfolio. Is the StashAway investment team currently looking into or considering an income portfolio that's based overseas, such as a US-based income portfolio?
Yes, we are. That's a short answer because it's part of our ongoing efforts to broaden the offerings, and we hear you. It's on the table. We are actually looking at a global version of that. It's not just US. We are looking at something that could potentially be way more diversified across geographies and currencies. So it is a work in progress. So bear with us.
Thank you, Freddy. And again, if you have any other questions, feel free to put them in the comments. So we'll pick them up next week, Freddy and myself. With that being said, we have a few upcoming things that I wanted to still mention. So we have a couple webinars coming up. In Singapore, we actually have a StashAway investment certification workshop that's on the 21st of November. So in a couple of weeks, it's from 9:30 a.m. to 12:30 p.m. So if you want to attend that, you can sign up with the links in the description below, as well as on our website. And for our Malaysian listeners, we have a webinar about an inside look into StashAway. So it kind of like you can ask a bunch of questions about how StashAway works, what you always wanted to ask us. 11th of November, 6 to 7 for Malaysia. Again, sign up is in the description below. Also, one last thing that I want to mention is we have our new podcast episode releasing today. It was all things venture capital. Our guest for this episode is Tushar Roy. He's a partner at SquarePeg Capital, one of our investors into StashAway. And he shares how venture capital firms operate, the funding amounts, what draws them to making investment decisions. And he also shares about what excites him about Southeast Asia currently. So if you're considering approaching a VC for funding, if you're thinking to invest through a VC, whatever that might be, this episode is not to be missed. So head on to stashaway.com/podcast to listen to it. And also, again, the link is also in the description below, and you can find that on all different podcast hosting sites as well. With that being said, have everyone a wonderful rest of your week. And Freddy and myself will welcome you all back next week. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.